The US banking sector is stabilizing after recent worries over the state of US banks and some high-profile collapses rattled the industry. The upbeat assessment comes from US Treasury Secretary Janet Yellen speaking at a Bankers Association meeting on Tuesday, saying the steps taken to protect deposits had shown the US banking system was safe and had strengthened public confidence. She also said authorities were ready to take similar actions to protect smaller institutions if they suffered runs on deposits. And James Sweeney is in New York with more on this. James, Yellen's comments appear to be helping to lift banking stocks in Tuesday trading, with First Republic leading the pack.
That's correct. Janet Yellen is pretty much coming to the rescue today. Her comments alone led the way for a more than 50% intraday surge today for First Republic. A much-needed bounce back for that company. And for those wondering what she said, well, Yellen pretty much pledged her support to the U.S. banks in a bid to ease the fears of financial contagion. Yellen told members of the ABA, that's the American Bankers Association, that the federal government is ready to step in to help out other troubled lenders after the collapse of Silicon Valley Bank and Signature Bank, saying that the steps we took were not focused on aiding specific banks and that our intervention was necessary to protect the broader U.S. banking system. And more importantly, she said that similar actions could be warranted if smaller institutions suffer deposit runs that pose the risk of contagion. So if you're wondering what does this all mean, Treasury Secretary Yellen pretty much taking a vow today to come to the rescue of troubled regional banks and regional lenders. And the response positive, as expected. The Dow Jones closing up nearly 1%. First Republic soaring just under 30% today. Key core, U.S. Bancorp jumping more than 8%. PacWest up nearly 18% today. Big change from yesterday.
Well, that's the fixes for right now, but there are also early suggestions, aren't there, of new possible permanent safeguards for the banking system. What are you seeing? What suggestions are on the table?
Are there suggestions? Yes, there are. Are there guarantees? No, there are none right now. What I'm seeing and what I'm hearing is that Janet Yellen is indicating that investigations of this crisis, the bank failures in particular, they're coming. And that apparently includes discussing the effectiveness of the current rules. She wants a full account of what happened. The review is coming, and in her own words, she said that we will need to re-examine our current regulatory and supervisory regimes and consider whether they are appropriate for the risk that banks face today. And what does this all mean? It means that just like back in 2008, don't be surprised to see some post-crisis reforms after these investigations are complete. Changes were made to adjust to the risk of the banks that they faced back then, and the same will likely happen now. Could this mean a permanent expansion of the FDIC deposit protection above $250,000? Possibly. It was just lifted, right, to protect customers of the failed Silicon Valley Bank. But again, it's just a suggestion, not a guarantee. In their own words, there's a lot of talk going on here, but we should find out more of the facts in the coming weeks or maybe months.
All right, well, let's look ahead to Wednesday, because it looks like the Fed has got its biggest, or rather most difficult decision that it's had to make in a while. Does it keep rates steady and risk inflation, or hike rates and risk hurting banks?
I have to be straightforward here. It's not going to be easy being Fed Chair Powell tomorrow at 2 p.m. Eastern, which is when the Fed will make its decision. Listen, there's a case to be made for and against a 25 basis point rate hike here. Simple. The Fed lifts rates, it shows confidence. Hooray. The Fed can then say it's managed to contain confidence so far and that it can press ahead with its great fight against inflation. At the same time, lifting rates could possibly increase concerns about the status of the stability of the banks themselves. Why hike rates when this may put more pressure on these regionals? Is the Fed really that convinced that recent efforts to support these smaller banks are more than enough? I mean, the Fed could also put hikes on pause this go around to, do no harm. But some can also view no action as a reason to be concerned about the banks. Comments like, look, they did nothing. You know what that means? They're doing nothing. Obviously, there's an issue here. Simply put, we'll find out tomorrow. But whatever is announced, it's pretty much unknown how the markets will react. And Fed Chair Jerome Powell, he's going to be front and center tomorrow. Guaranteed.
Yeah. All eyes will be on the Fed tomorrow. But James Sweeney, it's been a pleasure. Thank you very much.
Thank you.
Now to some of the other global